Hello guys, this is fairbinaryoptions.com and this is on the 22nd of February. We are looking over the weekend at what might happen next week, or we are laying the grounds for the technical analysis or technical trading on binary options next week. And this is the US dollar Canadian dollar. Now the reason for that is that we are growing bearish on the pair, and this comes in light of the last CPI release that we have, the consumer price index, the inflation that we had on the previous Friday. And not only that we had the CPI, but also the retail sales in Canada have been released. Now the CPI was coming bigger than expectations, or let's say the inflation picked up a bit in Canada, but this has been, let's say, outpaced or offset by the retail sales, which were coming way lower than expectations. In terms of Elliott waves, market, as you can see, tried to escape this possible falling wedge here, which I'm not sure it's a falling wedge. I mean, it is as a pattern, but in terms of Elliott wave, it has some flaws. So this here is escaping higher, and I would say that the move to the downside here that we have would be only, let's say, a wave A out of a flat that complete in here. Now, in any flat like this one is here, we should look for the B wave retracement, where the B wave should end, where the B wave is mandatory to retrace more than 61.8. Is this one more than 61.8 retraced? Yes, it is. Well, if it is more than 61.8, then we are looking for a five-way structure to the downside. Is it completed to the upside? Probably, let's say probably yes, but we don't know. We don't really know yet. What we do know is that the previous structure here to the upside has been a rising wedge, like this, from the first to the third wave, and from here to here. So has been a rising wedge, and this rising wedge broke the downside. This is by far more important than the next wedge here, because this one appears only at the end of an impulsive move with the terminal impulsive move, or as a C wave. So the move that followed now must be corrected. We already have three ways to the downside. This is, let's say, a bit unusual for the B wave to retrace into this area, because this area is for a common flat. But in a common flat, the B wave is the most time consuming. Now, it is definitely not more time consuming than the previous wave A. So what I would say here is either that the B wave is not completed, so price to go and make something like here, to make something like A, B, C, like this, and then the X wave, and now to have a wave A to the upside, B, or maybe the B would be even down here, B, C, D, E, and market to end in the end for the B wave below the 80%, or maybe to end here, but in the end the move to go to the downside, and therefore would like to buy put options as of next week. This, as is looking, is nothing but a flat, and now we're looking for a five-way structure after the B wave is completed. Most likely is not completed here. We still need some time, but I would favor from these levels, even if we're going to have a triangle like this, I would favor the put options, and this is why we are buying here, or we're looking to buy put options. So let's write here on the screen that we are looking to buy put options starting with next week, and you already know the expiration date because I explained you that we are expecting a possible triangle. In the triangle the swings are all over the place, so with expiration date end of week, expiration date. Thank you for being here. This is fairbinaryoptions.com. We are laying the grounds for next week's trading, and we are most likely ending a B wave to the upside as part of a flat. All these analyses are possible due to the help of our sponsor, Lionide. Bye bye.